to the channel. Today, I'm breaking down Queensland's mineral and coal lease landscape across exploration and production, linking it directly to economic conditions, investor confidence, and what it means for future project development. I'm using 3 custom-built dashboards today to analyze over 5,000 leases across Queensland. What you'll see is a clear story: where exploration is happening, who's controlling long-term production, and how lease renewals, aging approvals, commodity trends all point to the direction of Queensland's mining future. Let's get into it. So today, we're going to be looking at an overview, as I mentioned, Queensland coal and minerals, and looking at the exploration permits, identifying trends both over time and looking forwards, key expiry and approval trends shaping the next decade, what it sort of looks like, when we're going to see those spikes in expiry leases for both coal and minerals. We're going to talk about who controls Queensland's exploration as far as production goes for both coal and minerals. We will discuss production, lease age, renewal activity, and long-term implications of the age of the lease and what that sort of means for the Queensland mining industry. We will be touching on economic signals, looking at different sort of commodity cycles and capital flows here, production pathways across key regions. We'll be uncovering that to sort of see what regions have been producing more over a period of time. And then lastly, we'll be looking at native titles again, and sort of breaking it down to sort of have a bit of a look and how this affects production, in addition to what operators and investors should look for in the future. Queensland coal exploration permits. So as we can see here, there was 328 coal exploration permits in Queensland. Clear expiry cluster between 25 and 2031. As we can see here, the leases really ramp up. 31 leases due to expire here as far as coal exploration permits go in Queensland next year. So that will be something to look into, with it staying up here all the way through to 2030. So heavy concentration there, especially from 26 to 29. Most coal exploration approvals occurred. Let's click on this here so you can sort of see those leases that are expiring there in 26 for next year, and you can have a bit of a look here. Most coal exploration approvals occurred between 1990 and 2012. Okay, so we can sort of see here that that was the majority there. There wasn't a lot of approvals here, but if you look up here in 2010, there was 18 lease approvals. I think I'm still on 26 there. Yeah. Oh, sorry. Yep. So if I come back here now, you can see that there's 21 here in 2011, and then through sort of 1990, it sort of ramped up here through the 2000s during Australia's mining boom. And now that's tapering, sort of tapered significantly between 2014 and 21 there, as we started to move towards renewables. A handful of operators dominate the Queensland coal industry. Waratah Coal, which is these guys up here. Okay. A big one there. So if we look at Waratah Coal, they've got 10 total leases in the Queensland coal industry. ASF, Poking Coal, and Fairway Coal. Okay, they're the 3 big players here. So I can click on each one. We can have a bit of a look at, okay, what are their expiry years there, their lease lengths. So over 20 years there, native title, etc. Almost every permit is granted. Only 3 are still applications within this. So if I go here to granted, you can see that it's 325 here granted, and then application-wise, there's only 3, which is Hale Creek Coal Holdings. Okay, they've got an application in there for a exploration permit. Lease lengths average nearly 20 years up here, as we can see, reflecting historic long cycle investment. All right. So that's the Queensland coal industry there, guys. You can see, as I sort of said there before, mining boom was massive. 2010, 2011, late 2000s here. That was when we really saw the spike in approvals for coal in Queensland, coal exploration permits, which means, heavy capital inflow into the Queensland mining industry and economy during the mining boom. When this is probably pretty consistent with when China was, heavily reliant on Australia for steel, so coal and iron ore. So that kind of links up with that sort of market cycle. Next, we're going to go to exploration. So, minerals and critical minerals next in the exploration. So, there's 2,540 exploration permits currently in Queensland for minerals, heavily weighted to copper, zinc, gold, and emerging energy minerals. Approvals have risen sharply since 2010, which we can sort of see here. It's trended upwards here from 15 up to the highs here of 228 leases here and 242 here in 24. So we can really see that critical minerals is increasing, and there's a lot of capital injected into that particular area of mining. Um, so basically, um, we've seen approvals risen sharply since 2010. So yeah, that's this to this. Before pre 2010, it was pretty steady here all the way back to the 80s and the 90s. A large expiry wave occurs from 25 to 2030, most concentrated again in 2026. Okay. So if I click on 26 there, these are the guys that are up for renewal here for their exploration permits. So you can scroll down here, have a bit of a look at who these operators are here or leaseholders are here that are going to be up for a renewal. And I can see who's got their renewal lodged here on the side. So Territory Minerals have, um, and I can see down here that Cement Australia does as well. Okay. So that kind of gives me a bit of a rundown as to sort of what's going on here. Anglo Gold is a big player in this particular sector here in terms of the number of leases that they have. They also have quite a lot of leases expiring over the next 5 years. Okay. Queensland Energy Resources are another one worth having a look at here and sort of seeing what's happening. They hold the longest lease length on average out of all the critical minerals players in the Queensland market in the exploration um, critical minerals sector, at least. Um, okay, and if I go granted here, I can have a look at everyone who's granted applications. That's who's got the application in. For renewals, again, you can see Anglo Gold's going pretty hard there in exploration. So, um, yeah, it's kind of how that one there works. So, what I can also do here is I can go to native title, so 100% exclusive land, applicant elected to withdraw, and so forth. Okay, expedited, and I can see, you know, um, how those minerals plays and where those permits are going to go as far as the operators in the market. Okay, and that allows me to forecast, future investment decisions based in with some of these companies. All right. So next, I'm going to go to these are the production leases. So this is probably the most important. This is currently who's producing in both coal and the critical minerals sector in Queensland. So both of them are amalgamated here. So the total of 2,157 active producing leases across the state. The approval timeline stretches back to the 1930s, as we can see here, 1927, 1939. So in that sort of World War II era, um, showing this demonstrates how long Queensland's production assets have remained in operation in these particular sectors. Expiry profile shows a very large wave of production leases, 2020 to 2035, with a long tail to 2090. here. Okay, so we can see the expiries are um, basically they're trending down here. We've certainly because we've got all the way to 2090 because there is a lease here that expires in 2090, which you can see the JH Wagner and Sons Proprietary Limited. If I want to go to minerals here, I can see, who the main sort of players are down here by the total number of leases. It's Ravenswood Gold, with 42 leases there, although that's their total. They've only got four there in the mineral sector. They could be in a different minerals sector here. And then we've got North Queensland Lime. And then we've got Heritage Minerals Proprietary Limited. We can have a bit of a look down here to sort of see who's in that mineral sector. For coal or oil shale, we can see BHP is the dominating player here. Obviously, Anglo Coal is another player there in the market, as we can see down here with 21 leases in this sector, BHP 27. So I can have a bit of a look here and see what's happened there over time. They've increased their lease approvals here in this coal sector, and then for expiry each year, they've it's sort of there's a big expiry here in 2031 over the next 5 or 6 in 6 years' time, which you'll see a few leases there go for BHP coal, but otherwise pretty strong and consistent within this market. Commodities are dominated by minerals here, so we've got 48%. Followed by coal, which is 17%, and various minerals 14%. So we can sort of see that breakdown here. This is the total leases here based on the 2,157 total leases. This sort of is the breakdown of by commodity type in this pie graph here, which is what I'm referring to. Operators like BHP, Glencore related entities, and key gold producers hold the bulk of production assets. And the average production lease length is 33 years, okay, which we can sort of see down here. So these are all the production leases. So a few of you are probably thinking now, so what? So the timing of expiries across the exploration and production lines up almost perfectly. 2025 to 2035 is the most active decade for permit and lease turnover in 30 years. This will directly affect available ground, renewal competition, capital allocation, exploration budgets, mergers and acquisitions interest across copper, gold, and energy minerals. Investor appetite is shifting from coal to critical minerals. So this is something that's important here. I can also go renewal lodged up here as well to see who's got the renewals in this particular sector. If we look at renewals, a lot of these are minerals-based companies down here that have lodged for renewals. So that sort of further supports the shift that I'm just sort of talking about here now. Um, so exploration activity for minerals has 8 times the volume of coal exploration. Coal exploration approvals have slowed, while mineral exploration is still rising. We can sort of see here we're increasing up here year on year, 242 new leases, 158 leases. If we come down here to coal, you can really see that the approval rates really drop down here with coal. Okay. So this signals stronger investor confidence in energy transition metals, capital flight from long-term coal expansion, operators positioning around copper, zinc, rare earths, and gold. Production leases tell a story of aging assets. Many of Queensland's coal and mineral production leases were approved 40 to 80 years ago. This means assets need reinvestment or transition plans. So if we go back over here, you can see that there's a lot of some approved leases here that were sort of a long time ago. Even here in the 70s, there was a big inflow here up in North Queensland and some of these copper-based mines as well, heritage minerals. And what this sort of indicates here is there's some assets that need reinvestment or transition plans. Approval and regulatory environments have shifted dramatically. Renewal behavior becomes a leading indicator of long-term operator strategy. Bit extra clarity now for exploration. So coming back over here, where exploration is rising is the Mount Isa corridor, as we've discussed in previous videos. So if I go Mount Isa here, Mount Isa mines, we can see there's 51 leases here, and we can see that 17 approved here in last year in 2024. So the central North Queensland is another one there, where we've seen an increase in inland precinct. Production lease activity shows either stability or slowing approvals. This mismatch will influence future regional infrastructure planning, workforce requirements, downstream processing bits, and state revenue forecasts. Then the other thing, as I pointed in previous videos, is the native titles. Okay, so looking into this here and just filtering by native titles, um, this is something that influences approval durations for these businesses, feasibility studies, in addition to investor confidence, in addition to greenfield opportunities. So a few of you are probably thinking, you know, now what? So companies should prepare for high volume renewals and relinquishments. The next decade will see heavy turnover. Operators should lock in renewals early, reassess long-term asset portfolios, evaluate relinquishment opportunities, whilst targeting strategic acquisition of expiring competitor ground. Okay, so if you're a big player in the market, having a look at the competitor's expiry and trying to acquire that ground to build the portfolio would be a strategic move. Investors should focus on mineral-rich districts with rising approvals. Copper, zinc, and critical mineral corridors are seeing sustained exploration growth. The data suggests a multi-year capital reallocation towards these commodities. Production operators need to signal long-term intent. Public renewals, expansions, or a lack thereof will shape investor perception. Government and regulators need to anticipate infrastructure and permitting pressure. A renewal wave means increased processing time and stakeholder engagement requirements. Now, being a data guy, I just want to also just emphasize this point as well. Data-driven forecasting is now essential for the survival of a lot of the small to medium-sized players within this market. The combining exploration, production, renewal, and native title data creates a blueprint for future royalty projections, investment attractiveness rankings, supply chain risk assessments, long and short-term commodity outlooks. So that's the full picture linking Queensland's exploration permits, mineral and coal production leases, and the broader economic environment shaping investor confidence. The data shows a state in transition, moving from legacy coal assets to high growth mineral exploration, with a major renewal wave coming that will define Queensland's mining direction for the next 30 years. If you want the dashboards, code, or deeper analysis, drop a comment or message. Thanks for watching.